Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. And of course last week we saw an explosive start to the week for the precious metals, silver taking the center stage, rallying over 13% to hit $30 an ounce for the first time since 2013. That's in fact silver's biggest one-day move since 2008, and immediately off the open we started pulling profits off the table, which banked us 2,000 points over 4 positions. So for each 10 lots that you would be trading that position, that's $2 million of profit, or for each 1 lot contract that you would be trading that over 4 positions, that's $200,000 of profit. We also mentioned to you last week on Thursday's silver asset of the day that we had added 2 new positions on Palladium in the latest week, which had a big breakout in fact after Friday's non-farm payroll data, putting both positions up over 2,000 points as well. So overall, between Palladium and silver last week, we actually banked 4,000 points on those trades. So it was a massive week, and as we mentioned to you time and time again, right now is a trader's market. Keep locking in those profits. Before you know it, you're going to see these zigzag moves in the price action, and it will give you an opportunity to bank and then reload, bank and reload. And of course, you don't see markets just going up in a straight line, so you want to be capitalizing on this. Usually when one commodity goes up, then another will follow suit. So very quickly after we saw the explosive move on silver last week, Palladium then started to break out to the upside. That's where we positioned ourselves with new trades on Palladium last week. We also then saw platinum breakout and crude oil as well. So in fact, on crude oil, it's now jumped to the highest levels in a year, edging closer to $60 a barrel. Brent has surged 63% since November, whilst WTI crude oil has climbed 59% during the same period. And of course, this could just be the beginning as we're moving into the commodities super cycle. Many of the world's major investment banks, they predict oil prices to hit $70 to $80 a barrel over 2021. And of course, we know the bull markets, they don't move in that straight line that we mentioned. You need to keep taking profits off the table. Just make sure that you're really capitalizing on the back-to-back lucrative opportunities that we're seeing in the moment. It's really a trader's market. Commodities, specifically the precious metals, they're starting to attract a lot of attention now on a scale not seen since the global financial crisis in 2008. You would have seen just last weekend that silver essentially went viral over a number of different social media platforms, resulting in a 13% breakout to the upside, of course, on the Sunday open. Last month, Goldman Sachs described commodities as their preferred asset class over the next decade. And as retail and institutional interest continues to grow, this will keep driving the prices higher, especially considering the fundamental backdrop that we have at the moment for the entire commodities complex, which remains extremely bullish, supported by a growing list of influential factors, which of course includes money printing, more stimulus, accommodative Fed, risk of inflation, new COVID variants, near to negative interest rates, and waning confidence in job and business security. So we're very much in a trading landscape. So if you want to thrive and not just survive in the new trading landscape, you need to adapt and utilize a professional research-driven approach to the market. Having access to the right data at the right time is the single greatest difference between just ordinary and extraordinary result. And you absolutely do not want to be trading like every other misguided retail trader that uses outdated technical analysis and gimmicky technical indicators, which just do not work in this market. Now, as we move into next week, the biggest market moving event that you want on your radar will be paying close attention to President Biden's COVID-19 relief package. After Friday's closely watched US employment report that showed job losses in December, November and January were deeper than expected. So that underscores the need for additional stimulus as we continue to progress through the pandemic, and we're awaiting further updates and progress on that as we go into next week. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at as we go into a fresh week. First of all, moving over to gold, we're going to take it out to the weekly chart here, and bang on the close, we've actually tapped the yearly moving average, and you can see here where we're at that key level again, the 1800 zone, which was the breakout point that we saw over the summer before gold broke out to all-time highs. In fact, the following 3 weeks after that, gold rallied over 2,500 points, broke out from 1,800 all the way up to 2,075 points in just a matter of 3 weeks. Now, we've retested this level 3 times now over the last month. You can see how much of a magnetic zone it is, but also we keep temporarily breaking below it, but then closing back above it. And of course, the weekly close is the most important close that you want to pay attention to. This is where many bigger traders will make their trading decisions at an end of the week. They'll be making bigger trading decisions in terms of their portfolio towards the close of a week. And with gold closing as it is right now, it does actually set up the stage for the slingshot move higher now as we progress throughout the rest of February, because we keep maintaining on a closing basis, on a weekly closing basis, above that 1800 zone. And you'll see very much we still have the bull flag intact here for a potential breakout as we continue over the month of February. But as always, it's not just a buy and hold market right now. You would have seen this over the last month here. Gold has been up and down, up and down. You'll make much more by trading it, banking at the highs and then reloading at the lows than just buying and holding. In fact, many traders, if they've just been buying and holding gold since the summer, since June and July, they've made no money. So the price has literally come up to all-time highs. It's come all the way back down to 1800. Anyone buying and holding in this market is not making money at the moment. It really is about trading, but it's phenomenal for trading. The volatility that we have on the precious metals right now, you've seen this with silver, right, in the last week, is absolutely perfect for trading. So we go over to silver as an example here. So silver, of course, broke out to the highest level in 8 years, just above $30 per ounce. Then it got slammed. It broke down $4, so a 10% move in just a matter of 3 days. And this was excellent for banking at the highs here when we had that breakout off the open, surge up to $30 an ounce, which, as we mentioned, was the previous Goldman Sachs target. By the way, Goldman Sachs have now increased their target on silver to $33 per ounce. As we mentioned on silver asset of the day, we're coming into a very magnetic level here again, which is finding support at $26 per ounce. So just put your chart on silver on the monthly and look how important that $26 per ounce level was, going back to the breakout to the all-time highs here that we had back in 2011 and the subsequent breakdown, and then support at 26, the rally all the way back up to 35, broke down again to 26, rallied back to 35, and then eventually broke down. But this took several months, and we've just come back right into $26 per ounce of support, almost closed at $27 per ounce there on Friday. We've already seen a 2% move to the upside here, but it's done the job of flushing out a lot of the FOMO traders who've bought in essentially too late into the trade. They've FOMO, they're bought right in at the top, they've been trapped, and especially with the increase in margin requirements from the CME in the last week, they've been liquidated. And then, as is the usual case, you want to be banking at the highs here, not getting FOMO. You want to be taking profits off the table on these gifts, right? Don't get greedy. Just make sure when you've gifted a windfall profit, take it off the table, and this will enable you to get back in at much better prices. You can see that with silver over the last week. And then moving over to Palladium, this has been perfect for us. So essentially built into 2 positions on Palladium in the last week here with all of our traders at the Gold and Silver Club. We benefited massively off the breakout on Friday after non-farm payroll data. Over 2 positions, 2,000 points banked. So alongside silver, where we banked 2,000 points at the start of the week over 4 trades, we actually capitalized on 2 trades here, 1,000 points apiece on this Palladium trade, and that was just taken in the last week. So that worked really well. If you look at Palladium on the higher time frame, same story. We've come all the way back down to the yearly moving average. We've also had a reversion to the mean, so we've come back into a very key area of liquidity here for Palladium. Perfect opportunity to re-establish positions on this market and benefit from the breakout that we've already seen over the last 24, 48 hours here. Massive move to the upside. Great market to be trading Palladium. So that has worked out really well. And then moving over to Platinum now, just look at Platinum on the monthly chart. We are on the verge now of breaking out to 5-year highs to take out the 2016 highs here. Very strong close for Platinum. It's up 3.6% in the last week, 2.6% in fact on Friday. I would absolutely watch out for this because there is correlation. We saw Platinum lead the metals over December before we then saw the slingshot move high with gold and silver, where gold rallied just under 2,000 points over the whole of December, and silver, of course, also had a very strong move over December, eventually breaking out to 8-year highs, as you know, breaking out to the highest levels that we've seen there, $30 per ounce in 8 years for silver. So we are seeing the overall precious metal complex pick up a lot of momentum here. What we are also observing is that gold is lagging right now. So if you look at gold's price action into the close, all we've done is come back down, retest temporarily a break below 1800, but a nice strong reversal into the close after non-farm payroll data. As I mentioned, you want to be keeping an eye on this on the much higher time frames. Treat it as a trader's market. You do not want to just go into buy and hold in this market. You need to be coming in and out of it regularly, but it's fantastic for trading. You really do want to make sure that you're optimized for trading in these current market conditions. And of course, what we want to look out for as we go into next week is further clues regarding the stimulus coming from the USA, which could put another massive driver under the precious metals as we go into next week. That could be a major catalyst for some big moves. So I would absolutely keep an eye on that as we go into next week. As you know, we're going through an era of exponential change at the moment. So this is providing you with some massive trade opportunities as we continue to transition into this commodities super cycle. The pandemic, ongoing global restrictions, lockdowns, they are the new normal. It's not going away anytime soon. In these times of uncertainty, you've got increasing job insecurity, near to zero interest rates. We've just seen the Bank of England come out last week preparing lenders and banks to go to negative interest rates within the next 6 months. It just highlights the importance of having an essential skill like trading. It's become a must-have necessity. If 2020 has taught you anything, it is that you should never rely on just one income stream. Building multiple income streams is no longer an option. It is a priority to make sure that you're recession-proof and that you can thrive in the new era of change, not just survive. You want to gain an edge in the markets to supercharge your wealth. And in these fast-moving market conditions, you need to trade like the hedge funds, the money managers, institutions. You want to be utilizing a professional, research-driven approach to the market, having access to the right data at the right time. It's the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge is going to be in navigating these fast-moving market conditions with precision, accuracy, and of course, high levels of profitability. Trading like every other misguided retail trader that utilizes their outdated technical and gimmicky technical indicators, it just won't work in today's market conditions. You need to be making sure that you are trading in a professional manner. You want to make sure that your approach is the same as the professionals trading in the funds, the institutions, the banks, in order to really capitalize on the opportunities that we have right now. You want to look at data, market intelligence, cycles in the market, daily, weekly, monthly, capital flows, extremely important, alongside the daily sentiment, the intermarket correlations, the ratios, the macroeconomics in the market. Marry that up to with seasonality, geopolitics, key areas of liquidity, and of course what the hedge funds, money managers, and market makers are doing, and that will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars, access to real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivestradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.